Jobless claims are more than just a headline. So here's what last week's numbers really meant for the housing market in this week's weekly mortgage review. So last week, initial jobless claims fell to 227,000, and that tells us that layoffs are still low and companies are holding on to their employees. Now, however, continuing claims rose to their highest point since November of 2021, which means more people are staying unemployed longer and hiring is starting to slow down. Now, this type of mixed data is exactly why we're seeing the Fed take a cautious tone when it comes to cutting rates, as they're closely monitoring both inflation and employment numbers. Now, some members pushed for rate cuts later this year, but there's still a lot of disagreement on how soon and how much. Now, with that, mortgage rates did rise slightly last week. However, we're still in a strong spot for buyers, especially with inventory continuing to improve in most markets. This week will be much more active with the CPI on Tuesday, retail sales and import prices on Thursday, and housing starts on Friday.